Yeah, sure. And at first, I would say the Q4 results. I don't think I would qualify them really as a miss. I think they were largely in line. The most of the focus was really on 2024, right? What the guidance they were going to give. I think it was fairly vague. That may be a little concerning. Like, why not give more detail? Yeah, they said that volumes would be down notably in 2024. But guess what? That's what everyone was expecting, right? I mean, the market has a 2.1 million vehicle delivery number for 2024. That would be up still 16%. It was up 40% in 2023. So the market and the sell side numbers already have a notable deceleration in growth that was largely expected. So I don't think that's really a surprise. The big issue, as your colleague just commented, is really on margin. Now, again, they didn't give much there, but that was concerning because they did say it's hard to predict. And there was a lot of questions on the call on what margins will they be? Will they be higher? Will they be lower? Again, because of those price cutting. I think that may have surprised folks a little bit. But, all in all, for us at least, we only value the cars business as 10% of our entire price target. Most of the price target for us is on autonomy, things that won't occur for several years, if not decades in some cases. So in that context, I do think folks are getting a lot bogged down on 2024 numbers. In 5 or 6 years, when we look back at this earnings season, it will be akin to Netflix in 2011 when it switched to streaming from selling DVDs. So for me, I get it. There's a lot of pessimism on the dynamics of this car business near term. I think a lot of it is already known. The stock was already down $180 billion of market cap into the print. I actually think it'll get some retail support in the coming days and weeks. And all in all, we have to remember what this company is. It's a very big picture, long-term thematic view and not get bogged down on near-term dynamics.
It is a big company, but the details are also important. So I want to focus our conversation now on the margins, as you just mentioned there, because the commentary from Elon Musk was very interesting. He said that if interest rates come down quickly, margins will be good. And if they don't, then they won't be that good. But the expectation is that rates are not going to come down significantly and not anytime soon. So is the problem on margins actually quite significant and a big one for 2024?
Yeah, and I don't know if I would share that view totally. I think in Europe, you're certainly true. Our rates analyst is a little more hawkish, I think, saying the rates stay flat. So you are right there. In the US, however, our rates analyst here at RBC is actually a little more dovish, saying that it comes down the back half of the year. If you look actually at affordability in the US, which is, remember, that's Tesla's main market, outside of China, the dynamics actually look quite favorable for the consumer. Unemployment's very low. Inflation has come down quite a bit. Look at ATPs for autos. They've been actually quite high. Also, we have to say, look what's happened to the IRA. A lot of the competition has lost their credit. The Model Y has kept their credit. Right? The Mach-E from Ford has lost the IRA credit. And again, all they need to do is get 525,000 units per quarter. They just did 485,000 in Q4. I totally get it, but I think so far the consumer seems to be healthy, at least in the US. We have to see what happens in Europe. There still is a lot of demand for their products. So, and yeah, he's right. Interest rates are a big factor here. And all in all, it would appear that interest rates will, at least in the long term, should move down, not go up, especially in the US.
It's